When it comes to investing in IPOs, I've made my share of mistakes and they have been very, very costly. Back in 2007, back when Lululemon was just gaining massive popularity, I was already a huge Lululemon fan, and I was so excited that Lululemon announced initial public offering back in 2007. So I was so excited to become an investor rather than throwing a ton of money away buying their clothes. I wanted to actually make some money from Lululemon. Now, I already own my fair share of Lululemon clothing. Okay, actually a little too much. Okay, actually really way too much of Lululemon clothing. So it just made ultimate sense for me to become an investor. So back at that time, I scraped up my last $2,000 of savings and I bought Lululemon initial public offering at an average cost of $18 a share. But I made a terrible mistake. See, I had the stupid rule where if I invested in stock and it doubles, well, I sell it, okay? That is my claim to gains. So, like any newbie, I sold my shares when the stock doubled. Well, I'm sure you all know the story of Lululemon because Lululemon has shot up 1,500% since 2007. So that was a big, fat mistake. Because Lululemon is such a high quality stock and the fact that it plummeted recently down from all-time peaks, it got me super interested. I don't care if it surged 1,500% since I bought it IPO. Now it's already proven itself. It's got a big market share and most importantly, it's going through another growth cycle. And that's why I'm so excited in today's video to talk about Lululemon. What is its future growth plan? And I want to talk about the risks before we talk about the rewards, and I'll go through a couple of quick valuations I've done on Lululemon and whether it is a buy right now. Now, because we are reopening now, going back to a new normal, but still a normal, people are getting their shots. People are really wanting to go back and do some retail therapy and go shopping in the stores, try on clothes. I really think Lululemon is going to make a great post-pandemic play. Back in 2019, they made this massive presentation which covered their big growth plan called the Power of Three, which is first doubling men's revenue, doubling digital revenue, and quadrupling international revenue. Now, of course, years have passed and Lululemon has executed so well. In fact, so well that they already reached their second target, which is doubling their digital sales because the pandemic last year. I recently reviewed their quarterly earnings and I found out that they are also on track to doubling their men's revenue. In fact, they've been growing it every single year since 2019 after they've been making that become a huge focus. Ultimate goal is to actually get 50% of their revenue from international sales. And this is huge because the prime focus will be China. Lululemon has also made a recent acquisition, which is called Mirror, which is this at-home fitness equipment, which is literally this pretty mirror that's on a wall and it plays like your virtual personal trainer and you get to take live classes, which is kind of like competing with the likes of Peloton with their treadmill and their bicycles, except they have the mirror. Now with this recent acquisition of Mirror, because like Lululemon has massively strong cash flow, growing revenue, they have a ton of cash. This is a very smart move. It's a very smart bet because I think this could have a lot of long-term growth. It allows Lululemon to gain more subscribers and get into the subscription revenue model, like get into the activity equipment play. I think it's a really great platform to also sell more clothing. So I think this is a really smart play with high profit margins and huge scalability. So bottom line, with Lululemon's strong vision, with their big growth plan, which is the Power of Three growth plan, plus their huge brand appeal and their loyal following, like people like me, and supported with this very strong management with amazing execution because they've been killing it for the last decade, I really think Lululemon is going to be set up for success for the long term. Now, before we jump into, my valuation, we have to talk about the risks before we talk about the rewards. So here's my three, I guess, key risks I see with Lululemon. The number one risk is that, well, their prime focus is in China, and we really don't know if Lululemon is going to get that big brand appeal and massive adoption in China. The second risk is, well, we don't know how they will do internationally. Okay, let's be frank. Lululemon clothing is so expensive, okay? I am one of those suckers that have paid $100 for Lululemon pants. I love their clothing because it's so, so, so soft. I don't know people in China are willing to fork over $100 for yoga pants. Number three, as much as I really like the Mirror acquisition being a bit of a equipment and workout play and a technology play with a high profit margin, it's also could be a downside for Lululemon. Maybe they, unfortunately allocate too much resources and money and time to it, and then it kind of they lose their priorities. So this Mirror acquisition, well, we won't know if it's going to succeed, so only time will tell. But honestly, I don't know about these risks. They seem kind of low probability because Lululemon has been doing great when it comes to marketing. It has a huge brand appeal. It has a huge loyal following, and Canada Goose and Tesla, those type of brands have been very, very successful in China. So to me, kind of makes sense that Lululemon would also be successful in China. So if China is going to be a big prime focus on Lululemon, well, I think that they're going to actually succeed. Hey everyone, I'm a Canadian YouTuber that loves talking about stocks and real estate investing so that you grow your income, build your wealth, and ultimately design your ideal life. So please support me by hitting the subscribe button, the bell notification button so you get the latest and greatest videos too. Plus, it's free. You get to learn my 20-year journey investing in stocks and real estate in as little as minutes. So hit the subscribe button and that bell notification button. Now, Lululemon has done a great job and gave us forward guidance in their last quarterly earnings, which saves me a ton of research in number crunching. And because it has a lot of historicals, we're gonna like shortcut this. We're gonna do like basically a 5-minute screening. So they gave us a forward guidance of 5.55 billion to 5.65 billion for 2021 revenue, okay, in total. So they're gonna expect between 5.5 to 5.6 billion-ish in 2021, which includes $250 million in Mirror sales. So they're expecting to have $250 million of Mirror sales, which is actually a very, very, very tiny slice of their entire revenue source. And then they also gave us a forward guidance for earnings per share, which range from $6.30 to $6.45. I went to Yahoo Finance and went to statistics, and I saw the forward PE of Lululemon, which is 37. So because Lululemon's always traded between 30 to 40, that was kind of giving me a sense like, yeah, it's fairly valued. It's around within its last 4 years, multiple valuations. Now, of course, you can say, well,
Tracy, that seems so expensive. I mean, the last 4 years, they've been high, like trading at a premium. Like, do you think Lululemon really deserves that?
now hear me out. Now, I totally agree. That seems like Lululemon is trading at a premium compared to like 6 years ago when it was like, 30s, low 30s. But I think because Lululemon has released their Power 3 growth plan and they have much more ambition to rapidly expand their market share around the world, not just limited to US and Canada, which is what they only focused on 7 years ago. So I think that, look, Lululemon today and in the next 3 years is not the same Lululemon that we saw 7 years ago. So we can't use similar valuations from 7 years ago. Now, of course, you can say if Lululemon ever traded below 30 in the 20s, then it looks like super cheap. But I think honestly, Lululemon, everyone knows that they're going to grow around the world. They have a strong brand. They have crazy following, like because of people like me. In the next couple of years, I still think they're going to be trading at a bit of a premium. I forgot to mention their return on invested capital, which is 71.9%. Okay. I mean, I don't know all the stocks in the world, but there isn't a lot of stocks that can compete with Lululemon with 71.9%. So because, well, Lululemon's been around for a very long time, we can head to tipranks.com and let's check out what the other analysts are saying for their 1-year price targets. And as you can see, all of them have price targets that are above today's price, which ranges from a low of $330 to $465, which at least gives us a 10% upside and plus. And the average price target is $398. So I think that's a pretty good like risk versus reward ratio if the analysts are correct. You're probably thinking, and just the same as I was thinking, like, is it realistic to think international sales is going to make like up 50% of Lululemon's future revenue? So when you look at Nike and Under Armour, in fact, more than 60% of their revenue is from international sales. So I think that, like, given that Lululemon is really in its early stages with their international growth, and they're really I would say, argue that their brand appeal is, really, really up there. I think that they can definitely, maybe not hit it in 2 years, but maybe it might take a little bit longer, but they could be hitting the same market expansion with same similar percentages of international revenue, just like Nike and Under Armour. And one last thing, of course, we didn't even talk about their long-term catalyst, which is their Mirror acquisition, okay? With that, which is kind of putting it a bit more of a tech spin. And tech companies have higher profit margins, and it's easily scalable. So with a Mirror acquisition, they have already said in the forward guidance that is going to be a subscription model, just like Peloton, okay? So if there is a good market adoption of Mirror and, paying for the memberships and the subscription model for Mirror, well, that's a long-term ongoing growth for a very, very long time for Lululemon. I think that you probably guessed it. I am making a position in Lululemon. Yes, it totally sucks buying Lululemon stock at way more expensive prices than what I initially bought it at initial public offering. But you know what? I've accepted my mistake. I've learned my lesson, and now I do massive research and due diligence before I start making a position in any stock right now. Hey everyone, I hope you found this video super valuable. I did a ton of research on Lululemon just to make sure that I dotted all the I's and crossed all the T's. Now, if you found this video helpful, please, come on, help a gal out on YouTube, okay? Hit that like button, smash it, smash it. So you let me know to create more of these videos for you. And of course, it just means that you support my YouTube channel. Hey everyone, while you're waiting for next week's video, I highly recommend these 2 other videos, okay? These videos are full of valuable content. I really think they're going to help you in some way, shape, or form in your investing journey.